GM everyone, welcome to today's Space 2025 Wrapped. It's been a hell of a year, so we just wanted to do a little wrapped before the holidays. It's pretty casual, obviously. James might do the Braveheart speech for all of us. I'm really looking forward to that. Basically, I'm just going to field the guys some questions, but for the most part, I'm going to let them do their thing, tell us what was up this year. And if you guys want to ask a question, feel free to drop it in the chat. And then depending on time, we'll try to get to them. But before we get started, can you guys all just introduce yourself? And Nick, Big Boss, you wanna go first?
So, hi everyone. I'm Nick Carey, one of the founders of Blockchain.com, we're excited to share some reflections, but also just spread some holiday cheer as we head into the end of the year. So, great to be with everyone tonight. I will pass it on to Kevin.
I'll go next. So, I'm Kevin Blackburn, Director of Financial Strategy here at Blockchain.com. Been here for just over 6 years now and focus most of my time on treasury, risk, capital markets, and FP&A. I'll pass it to Jambros.
My name is James Ambrose, head of digital asset treasury solutions here at blockchain.com. Been here around 2 years. Long story short, my job is to talk to our institutional clients on how to build a tailored digital asset strategy for them and speaking with clients all around the globe. Last but not least, B. Coop.
Thanks, James. Brian Cooper here. I've been at blockchain.com for 4 months. Been in crypto much longer than that. And I run our financial operations team focused on our institutional business. So any and all things institutional, my team helps facilitate and support.
Nice. And welcome to your first space, Brian. I think the guys will go pretty easy on you, so no worries there. But we're just going to start from the beginning. So Q1, Trump gets into office, launches his meme coin, and then from there, we just started seeing like major indicators of interest in crypto. Nick, kind of curious, do you think that the scale of interest and adoption that came after Trump's win was predictable? Do you think that it wasn't predictable? I think like when people were looking at the election originally, it looked like it was a pro-crypto versus anti-crypto team coming in either way.
Yeah, it's a good question. I actually think it's kind of a misconception. So interestingly, there was a political action committee called Stand with Crypto that was very active in the last electoral cycle, and it was nonpartisan. The main perspective that the political action committee had was that we wanted to work through finally getting legislative certainty in Congress to help enshrine crypto on the national agenda, and this was very, very effective. We were supporting candidates on both the Republican and Democratic and independent side, but basically anyone that was pro innovation, financial innovation, supporting software technology, entrepreneurship in general, and so that was actually proliferated in a very grassroots way across the United States. And so there's some interesting factors that back into that. And crypto in a lot of ways has always been a retail-driven phenomena. Started off with Satoshi Nakamoto publishing a white paper and some early internet adopters basically testing and using it and developing it, and then many other digital currencies and cryptos coming into the market after that, and being very retail driven. And it's interesting to me that a decade and a half later on, those people showed up in a meaningful way to push an agenda to help create more legislative certainty. And legislation is important because that becomes law of the land. And so that was the real agenda behind the political action committee known as Stand with Crypto in the United States. And then if you look at the composition of the people that were involved in that movement, it was every state, kind of all creeds of people, and really kind of a younger and highly motivated, mobilized group of voters. And they care about crypto. They want to see crypto be treated fairly. It's not about getting advantages. It's about being treated, on an equal playing field. And anyway, that was an extremely successful movement. And I think the Trump campaign and President Trump saw that and sort of put it in his wheelhouse too. And so what was a bipartisan thing became also on his radar. And he acted on that. And it's one of the few areas over the past 12 months that you've actually seen bipartisan cooperation on Capitol Hill. There's a lot of polarization in American politics today, and not here to comment on that. But interestingly, one of the only areas where people are meeting and breaking bread and cooperating is on legislation related to digital assets. And so that's why you saw the passage of the Genius Act earlier this year, which was about supporting stablecoin innovation and development and making sure that America was leading in that category. And the Clarity Act, which provides market structure beyond stablecoins with emphasis on all kinds of different organs of American politics being in the scope of that, is right now being sort of debated on the Hill, and it's hopeful from our perspective that that also will go to the president's desk, hopefully in the new year, and may take a little bit more time to get it done. But it's one of the few areas where you have cooperation. So anyway, I think what's great about crypto to me, if you were to look back over the last 10, 15 years, is how far it's come. The fact that it's now on the national agenda, it's being legislated in a bipartisan way. That's really where we wanted to land, because this isn't about a left or right thing. It's just about having a future-proofed financial system that treats everybody fairly and then compete on an even playing field with Wall Street and competitors around the world. So anyway, hopefully it's a bit of a balanced perspective on that. But yeah, it's been a hell of a year. It was very, very advantageous to have an alignment between both the House, Congress, and the executive branch to support making sure that America is leading in the software development of digital assets generally, and crypto and blockchain technology.
I just want to say, Nick, you're so well media trained. Like you got your answer down pat. That was good.
Oh man, it's because I'm just sitting here reading from a script, obviously. So just
oh yeah, what script?
No,
what are you talking about? I would never script anything.
Nick has done that same spiel for the last 14 years now. So
exactly. Yeah, just keep polishing it.
Yeah.
You should follow up on that then, Kevin. What do you got to say?
Yeah, I mean, I will say that Trump getting into office and launching his own token sort of the night of was a pretty insane part of the whole thing. But I think Nick kind of nailed it. It's much bigger than just sort of the headline of one person getting into office. There was sort of this huge shift around the U.S. sentiment around crypto, and I think like we obviously have tons of conversations and overlap with regulators and government agencies and institutions, and this like pro crypto movement is just sort of helpful for not only us but on the other side of just providing more clarity and more certainty around the situation. And I think that's kind of what you're seeing with a lot of the pro crypto movement, and the U.S. is probably a bit behind Europe and other constituents on this stuff, where for a long time you'd get in these regulator government meetings and they're like, so what is staking? Like, what is ETH? And now like they actually understand this stuff, and they're not trying to lift TradFi rules onto crypto products and crypto pieces. They're actually understanding like fundamentally what's going on. And all right, how do we actually build acts and rules and laws around this stuff? And there's always a stigma that like no one in crypto wants regulatory certainty or regulatory rules and everything. But it's really hard to play by the rules when there are no rules, right? And I think we definitely welcome it. We definitely have a big voice in those driving conversations. So, as we continue to provide more clarity and more certainty and more of a roadmap of how this becomes regulated, I think it's sort of a win for everyone.
Now, I kind of want to just like take it back to the Trump coin, because we obviously had to talk about that. The Trump coin action was crazy, because I think it's now trading at $5.65, which is down from what it was like $70 initially. Guys, correct me.
Yeah, I mean, it started off low and then spiked to about $75, I think, sort of night of, and then has sort of done a pretty solid retracement down back to $5. But yeah, I mean, I'm happy to talk about it. Is there a question that you want me to answer?
I mean, I'll step in there, Kev. Like, look, I think meme coins need to be more broadly understood in the same way that a lot of people get familiar with like early hobbies. So you talk to folks that who used to collect baseball cards or Pokemon cards or Beanie Babies, and I think the Trump administration and Trump himself, really saw the opportunity to connect with his donor base in a completely new way. And like there are criticisms, arguably, about doing that the way he did, but it is a bold embrace of innovation and a direct engagement with a tech savvy base. And I think it's also kind of an interesting shift toward alternative funding mechanisms for a campaign. And so you bundle all that up together, and it's kind of a playful and strategic branding move for a president that was trying to lead from the front on an entire area that was sort of novel, like no one had ever done that before. So I think that's from a variety of perspectives, you could probably assess that in a bunch of different ways. But while the meme coin for Trump, hasn't maybe been performant financially, I think in a lot of ways, if you're buying baseball cards or collecting coins from different countries or other things, you're doing that because you're practicing learning more about the basics of economics, which are all based in supply and demand, and communities and people finding communal interest and novel value in things. And sometimes those are funny things, and sometimes they're based on memorabilia or other things. So, we've seen this president be very supportive, I think, of making sure that America is competitive in winning and leading in the development of digital currencies and blockchain technology. And for the last 10 years, that was not the case. Most of the work that was happening in our space, even from open source software contributors, was really kind of offshore around the world. And other markets were beating us in the United States. And like the United States should be number one in all of these things if it has the ability to create the conditions to do so. And we have advantages in software in a lot of ways because every single computer science language has an English syntax. And so, making sure that all that stuff is happening and being cultivated and built and supported by, America, I think is extremely relevant and valuable to the American experiment and proliferating American leadership around the world. So, anyway, there's my perspective on that one. Let's go on to the next question.
The next question was about memes, and if you just lost the plot a bit.
Oh God!
But meme coins in general, like they had an interesting year. I think that's why we wanted to bring up, Trump coin, just because it had like that incredible skyrocket and then kind of fall. But like in general, James, what's your take on meme coins this year?
Yeah, I think meme coins have had a really crazy year, to be honest. I'm looking at the chart right now because I think it's just so important to contextualize like these different crazy phases that we go through. Because like still everyone goes to Thanksgiving and like their grandparents ask questions about doggy coin, like asking questions about Dogecoin. And like the other day I was explaining to my mom what pudgy penguins were. And she was like, is it penguins or is it crypto? I'm like, Mom, it's kind of both. And people don't really get it. So I think it's important to zoom out. But like, if we look back to like that craziness of the end of 2024 with the Trump election, like we were trading down with like a total meme coin market cap of around like 40 million. Like that jumped all the way up to like 150 after the election. Now we kind of went back down to now around 40 million with like for the total market cap for meme coins. And I think like the meme coin super cycles are entirely linked to like these huge moves in Bitcoin price. Because obviously Bitcoin price keeps moving and then you get all these crazy tokens launching, trying to kind of follow, and all these retail traders trying to make a lot of money. But I think like the different narratives that we've seen across meme coins this year is just super interesting. Like you remember early in the year, we had the launch of Pump.fun. And that was one, absolutely crazy, but two, really exciting for meme coins, but also Solana ecosystem as a whole. Like I remember back when Pump.fun launched and they still had the video, the ability for people to launch a token with like a video, and all these kids were streaming their token launches and rug pulling people, unfortunately. And it was just all in all a quite hectic time in the crypto markets and in the meme coin space specifically. Like certainly we've seen a lot of muted price action in meme coins recently. But I think the volumes are still really, really high as it relates to meme coins. Like I think, my meme coin winner personally this year is definitely Fartcoin. I think just the narrative around Fartcoin and the Fartcoin community, how it kind of tied into AI and kind of was like the perfectly timed launch of a meme coin. That I honestly highly is my winner for meme coins. But I think, speaking to meme coins, also you'd be remiss if you didn't mention the insane volumes we've seen recently around trading perpetual futures. And so now it's really, really easy for retail investors, who also trade a lot of meme coins, to now trade with like insane amounts of volume and leverage on a lot of these perp dexes or just like centralized venues utilizing perpetual futures. And I think just like the proliferation of perpetual futures, say that 10 times fast, the proliferation of perpetual futures is also probably one of the main themes for the year too. And that's all tied with like the broader meme coin and kind of leverage narratives that we've seen across both retail and institutional adoption for the year.
I just really quickly, James, you said proliferate because for all of our listeners, there's a Slack group chat going, and everyone's making fun of Nick for using the word proliferate so much. Just for a little bit of context.
Wow. Okay. Well, good. Report them all to HR right now.
No, it's fine. You're in the group chat, Nick. You could see it if you wanted to.
I'm not multitasking.
But Brian, curious, since you're head of like institutional trading, and that's obviously a more serious part of the business, do you have a favorite meme coin? How do you feel about meme coins?
I think of meme coins as like, even from the institutional side, yeah, it's a retail driven kind of phenomena, right? But institutions respond to large trading volumes, price movements, right? They want to get in, they want to make markets, they want to trade against, hedge that activity. I will say I have a bit more of a boomer crypto portfolio, but I want to give a shout out to the bonk community. Dog coin of the people for the Solana community, and I think I got encouraged to dabble a bit. I'm stacking bonk as we speak. And it's less about the price movement for me and more about I think the community's cool, and I'm super into the Solana network. So something that starts purely as a meme, kind of on the back of the FTX debacle, and trying to bring a bit of community back to the Solana ecosystem. Actually, now they're starting to build in some utilities. So, I'm probably the least exposed of this group to the meme coins, but even I like to dabble. So I'd say bonk is my current favorite.
I think just based on the intern profile picture I've got going, you guys can tell what my favorite of the moment is. Kevin, James, do you guys have a favorite before we move on?
Definitely Fartcoin or Pengu for me. I think the Penguins community is honestly second to none. It's pretty strong what they're doing. I'm a hockey fan personally. They just inked a partnership with the NHL, so I'm pretty biased there, but pretty pumped for what they have going on.
I'm a big dog with hat guy. I like what they're doing.
You look like one of those guys.
I like what they're doing over there. They got some spunk.
Say what?
They got spunk. They got character. They got grit.
I think you said spunk. That's okay, Kevin.
Spunk.
You didn't make a mistake. But bigger than memes this year is definitely like AI and crypto. And you can't really read anything on social media now without people talking about AI or like speculating something's AI because of those stupid M dashes. But obviously we have June, and Nick, you've spoken quite a bit about, AI tokens. We had a few different founders from some AI projects on the podcast. What do you think? Do you think AI tokens and agents, are they overhyped? Are they underhyped? What's your take? You get that one, Kevin.
Yeah, I'll take it. I'm a big AI guy.
Are you a Juner though?
I'm a huge Juner. I encourage and implore everyone on this call to try out June AI on Blockchain.com. But AI has obviously been a really big talking point this year. I think it's won Time Person of the Year, or like creators of AI or something, which I don't fully understand, but I get where they're going. But I think that the crossover of like AI and crypto is super interesting, and it's not inherently good or bad. I actually heard this the other day, and I thought it was a really clever way of thinking about it. Of like AI accelerates intelligence and crypto enforces rules. And I think how we sort of responsibly combine them is pretty extraordinary, and the outcome and the opportunity is pretty enormous. And I think people having these thoughts and theories of AI becoming too powerful and becoming unwieldy. I think crypto is actually where you can reel this in, right? Like AI becoming too powerful without that accountability is actually the scary part. And as AI agents start making decisions and handling value, you kind of need the foundation that crypto offers, of that like open, auditable, global role of your financial and legal system. So I don't know. I'm super bullish on it. I think if done correctly and properly and with the right guardrails, I think there's like a super powerful combination of AI and crypto.
Yeah. Kev, question. Do you think it's AI and crypto or AI and blockchain? Because I think people always get like obsessed with the idea of like AI agents making trades, handling money. Like I'm probably a little bit more like interested and passionate just about like the intersection between like AI and blockchain as a whole, because like eventually, and I hope like, and obviously there's a lot of instances in the space already where like blockchain technology is not just used for trading cryptocurrencies, right? It's distributed ledger technology for, I don't know, things like tickets or tokenization of different things that maybe, I guess, have intrinsic financial value. But like, yeah, there's a lot of other reasons why people would use distributed ledger technology, aka blockchain, for a lot of things. And so I think people always get obsessed about like AI slash crypto, but I think it's more AI slash blockchain for me.
Yeah, I agree. I mean, like I'm a very visual person. I feel like I view it as like a diagram where of blockchain technologies, cryptocurrency and the financial system is like one component of that. And then you have other applications that you can use, blockchain technologies in, whether that's, the energy system, the medical system, ticketing, like you mentioned, the legal system, like the financial component and the crypto component is really just one microcosm of that. But yeah, I think it broadens out to not just crypto and the financial system, but will apply to a lot of different things that are blockchain related. And even like real world assets and tokenization, like that's been a pretty hot topic this year, right? Like similar thing there. Like it expands more than just it's essentially taking that blockchain technology and expanding it out to more than just money.
So kind of going off of that, Kevin and James, I'm not going to let you speak. You kept using the word system, which made me think about like institutions and how like AI is really propping up crypto, which curious, Brian, to kind of get your feedback on this coming from the world of hedge funds and TradFi. What do you think when you see all of these like big legacy institutions kind of jumping into crypto now?
For me, the institutional adoption has been happening. It's not always visible. It's not sexy. It's not high profile. But and these institutional adoptions, you have to think about it from their perspective, right? Cryptos, they view this as another potential asset class that they can trade, that they can hedge risks, they can offer kind of legacy TradFi products against. But they're also going to generally be very cautious. And that's partly because they have a franchise that they've already built that they, in some cases, want to protect. And in a lot of instances, crypto is actually a threat to to some of the TradFi business models. So I think they've all been paying attention. Some have been moving behind the scenes. Some are starting to move more publicly, but they also won't move very quickly. They're going to be slow, deliberate, methodical. They have layers of kind of decision making that they have to go through. But when they come and make a decision to lean into crypto, they do it in a big way, and they do it in a transformational way. So, we're engaged. I've been engaged with institutions since I got in 2017. And you're seeing more and more momentum being built there. And I think it is an inevitable occurrence, right? Like these institutions, once they decide to move in, they won't move back out easily. right? So, and they're going to add a lot of credibility to the space. You're going to start to see kind of more hybrid, in my mind, hybrid TradFi, DeFi crypto products. And you won't even necessarily, say 5 years from now, realize you're interacting with crypto networks, right? It'll be part of just a natural banking transaction or an insurance product or whatever the case is. So I think the institutional adoption, there's always people asking, "Is this it? Have we jumped the shark, if you will?" And I think we're very close to it being obvious that institutions will be kind of stepping over each other to try to get action in this space. So yeah, we have these conversations. We're engaged in a lot of conversations around partnerships. The timing is always a bit slower than we might like, but they're coming in, and I think that when they come in, they'll come in a very big way.
What do you think is like stopping people, right? Like, is it the fact that Bitcoin goes up and down, 30, 40% in a year? Is it the regulatory stuff? Is it the utility of it? Is it the interface, the security of it?
I think when it comes to the institutions, the biggest thing they're worried about is it's not the volatility. There's volatility in other institutional products. I used to be a power trader. That's an extremely volatile product that is well regulated. A lot of institutions that have commodity shops, they actively trade that. I think it's more the regulatory certainty, and we've now gotten a bit more of that both in the States. We've got that in the EU, and you're essentially, once you're comfortable that the broader regulatory relationships that you already have established, that crypto is not in conflict with those your existing regulators, and you get a bit of surety and certainty there, then that's really the last layer that needed to be covered over before these institutions get confident and comfortable with making investments, recognizing that they're not going to have to pivot their strategy as the whims of the regulators potentially change. So I think it's that. I think it's that regulatory certainty that really gets the institutions off the kind of planning stage into the building stage.
Yeah, I'll be honest. I was a little bit disappointed with the pace of adoption this year. Like, if I think about back to like January, February of this year and where we were, like, to me, it was like the scene of the Hunger Games when like everyone comes up from, I guess, the ground, and they're around like the cornucopia thing, and like everyone's staring at each other, doesn't really know what's going on. Before obviously the buzzer goes down, they all sprint. Like, some people go to the woods, and I thought like that was where we were in the crypto market back in January, and everyone was just waiting for like that person to move first. But then throughout the rest of the year, really no one moved. I thought it was going to be really quite crazy with different US states starting Bitcoin reserves, different nation states starting Bitcoin reserves. And it was going to be almost like a war games mentality, like almost just an accumulation strategy at a pace we've never seen, with all this different nation state and kind of institutional and state and government agency adoption. Admittedly, that did not happen. But I think what also did happen was kind of a lot of banks and a lot of institutions made huge steps forward into establishing kind of digital asset groups of their firms and establishing digital asset strategies. Like, you have a lot of banks in the US who are building out custodial services for crypto assets and offering different crypto products and on-chain settlement and things like that. And the reality, and Brian, Kev, you guys know how slow kind of the traditional banks operate. These guys, like, it's not that they don't want to get into it. It's just that these things take time, and it takes a while to, go through the risk approvals, go through the committees, build out these tools and systems. And it's like, oh, you have to build a new pricing systems and find new ways to audit those things. And all these banks are regulated. They're all SEC filing. And so like these things just take time overall. And so I think a lot of banks made a lot of moves this year to continue to set them up for long-term success. But I definitely think we're a little bit behind where I thought we were going to be at the beginning of 2021. No, not 2021. I don't know what year it is. At the beginning of 2024.
25?
Well, yeah, it's
Jesus, James.
It is 2025.
Here's the thing. So, like a big bank, like I don't know, big high profile retail facing, institutional facing bank, they'll probably be making decisions now and in Q1 of next year that won't even surface as like products that a customer sees until 2027, right? Like they run on like year planning cycles at least. The other thing is, and there's a bit of if you work with a certain custodian now as a big bank, right? What you really like is your current custodian that you already have all of your network and all of your other assets you store. You'd really like to use that same custodian for your crypto, as opposed to go build out some new relationship. Go do your due diligence on a pure kind of crypto related firm. So there's a bit of, as these institutions start to layer in, right? Whether it's custodial relationships or lending and insurance or stable coins, whatever flavor you're kind of interested in. These big banks and big institutions need bits of all of that to make, say, their product offerings work. And they really want to use that from other large institutions that they already interact with. So it's a bit of, you've got to wait until there's enough of a float across the board, and then you start to see quick adoption is what I suspect. So I tend to agree, James, that I think we're a little slower than if I had to forecast first of the year or mid-year. But I wouldn't be surprised if next year there are massive uptake and adoption on the institutional side, just based on the pace at which and the level of engagement that we're having and that I see in the space.
I think you kind of set me up perfectly, Brian, for our next question. And James said something interesting about how, James, you thought there'd be like a crazy rush in, like in the Hunger Games. It definitely seemed that way with stable coins, where there was just so many stable coins suddenly in the market. Brian, do you kind of want to speak to, or maybe even Nick, because I can see he's not muted. Like, Nick, I know you're listening. Either Brian or Nick, if you want to speak to kind of what.
No, that's what I love about
people
Nick.
care about stable coins. You're such a good listener. Like, why should people care about stable coins? Like, everybody that's on the space today, why is this a big deal? Why were institutions getting in on this?
First off, if anyone wants a fun game to play, go to a crypto conference and take a drink every time they say the word stablecoins and see how long you can last. I think I've been to a few crypto conferences this year and heard the word stablecoin said at least hundreds of times. But maybe I'll pass it over to Brian at that point.
Yeah. So stablecoins, if you think about it from a legacy TradFi institution, right, independent of their view on retail and meme coins and Bitcoin and Solana and everything else, they all touch fiat, right? And so I'd say the regulatory certainty we got with the Genius Act, we got with in the EU with MiCA, like anything that is getting them to be able to tiptoe into crypto is super advantageous for the industry. So I don't really care that much about stable coins, right? Like, to me, stablecoin is just something you hold when you don't want to have Bonk or Pepe or Bitcoin exposure. So you kind of, you take down your funds, but you don't really want to take them back into dollars. You just hold them in stable coins, in transit, right? And we move stable coins around all the time. But like, from a bank's perspective or a large institution's perspective, there's a massive opportunity there for them to get potentially a more efficient processing engine. And any adoption you get in stablecoins is a bit of tiptoeing into the space. You get comfortable with stablecoins, well, then it's not a far extension further down kind of the rabbit hole with crypto more proper. I don't personally, interact with stablecoins a ton, right? Like, but the large institutions that will do so in a transformative way, and so I think it's great for the space that that you're seeing this kind of uplift in discussion and utilization around stablecoins, and I think that's like a necessary building block that you're going to see a lot of like innovation on top of.
Yeah, I mean, well, it's also gone, like, stablecoins have gone from this, crypto niche, whereas like the highway for DeFi protocols, to like a proper global financial product. Like, stablecoins have become the fastest, cheapest, and most successful form of dollars for the rest of the world, right? And if you think about, it's sort of a perfect storm where there's kind of like three big points in my mind of like why the market cap for stablecoins has gone from, I don't know, like 120 billion to like 300 billion in 3 or 4 years. And I mean, the first one is just like the global demand for dollars kind of went parabolic. If you think about, outside the US, people want dollars with interest rates being high, uncertainty in other countries, devaluation of other currencies. And it's sort of become like the democratized dollar, and the easiest form. Like we have customers and clients all over the world, and like we sort of see that firsthand. Like we have kind of a front row seat of that transformation, and the way, in users in countries, with high inflation or unrest or political uncertainty, like they turn to stablecoins in just a much different way than was going on 5 years ago.
Just add, and I don't even know if you know this story, but I was working on a transaction this year, and and the board for the transaction asked me a question, and they go, "Why should we accept stable coins for this transaction?" And just very simply, I said, that's an amazing question. With the traditional finance institution, we're going to send out paperwork for the transaction on Saturday morning, and then people are going to have to fund the transaction next Monday or Tuesday, which means that you won't be able to officially close the transaction until Wednesday next week. But if you accept stablecoins, we can actually send out all the paperwork for the transaction on Saturday. Everyone can send in their stablecoin payments on Sunday. And then you could officially close the transaction Monday morning pre-market when you have 100% of the commitments already received. And like it was quite easy in that example for the board of this traditional finance group to understand, wow, okay, these are cool things that allow us to make payments over the weekends. So, it makes public capital markets things quite easier. And so like the education is still ongoing, and people are slowly learning. But like the use case in like that one specific example was, quite obvious and easy for them to quite see.
Yeah, I feel like anyone that's interacted with a banking portal and has to send a wire quickly realizes how incredibly inefficient and annoying banking rails are, and stablecoins sort of solve a lot of that.
Yeah, the fees on a wire are expensive, and then you don't get it for 3 days. I think that's it's just such an example of like an always on, better, cheaper, faster solution for something you have an expectation for these days. And so all the things you guys described are reasons why stablecoins are growing and are going to be very successful. So one interesting comment I would have, if you look at the total supply of stablecoins today, denominated by different currencies, it is extremely concentrated in US dollars. And so I think it's like 99%. We can probably get someone to fact check that in the background, but it's predominantly dollar denominated today, and they're all denominated on layer 1 blockchains. So you're doing on-chain finance with digital dollars. And basically means anyone anywhere in the world that has access to a smartphone now have a dollar denominated wallet or account on their phone. And that was something that just is not ever going to be possible with traditional financial service. And it's always on. And you can operate with it 24/7, 365. It is a really big deal. But it's not so much about stablecoins being dollars. It's just a gateway to entering an always on internet capital market. And you're going to want to have a diversification of assets in that market. And some of those things include things like Bitcoin, which has been the most stable, hardest currency in the digital space since the very beginning. And then people learn about lots of other things, and they trade and learn about memes, and that's cute and funny. And sometimes can be rewarding, but there's hard assets with real economic foundations, and then that I think people learn about once they kind of enter this fully digital, always online financial system. And it should have been that way. It just was impossible for traditional banks to basically develop and go to the last mile and put an ATM in every village in the entire earth. But we can do that with software, and that's what's happening.
As riveting as stablecoins are, I'm gonna shift the conversation over a little bit to something a bit more exciting, and that would just be generally the narratives that have been all over Twitter in the past couple of months. So stablecoins, there was like stablecoin spring, stablecoin summer, which like I love a good name, but we're moving past it. In October, everyone was expecting October. And then all of a sudden it was October, which I swear that I coined. I swear I was the person that said that. You guys can tell me if I'm wrong, but I didn't see that anywhere else. And
You're
there
right.
was,
I like
yeah,
that.
I know
I
I'm so
really
right.
like that.
Yeah, October. I mean, I don't want it to happen again, but like, I was pretty proud of that. Anyway, for a few weeks on crypto Twitter, it was like super wild. Like, it's so over. Then people like were so back, like so much hysteria. But Kevin, like, what's the deal with like this year's price action? And do you think that we're kind of still in the 4-year cycle? Is it broken? What do you think's going on?
Oh, it's so over. I'm kidding. I'm kidding. I don't think that'll. Um, I mean, yeah, 2025 has been super bizarre and weird, and I kind of mimic what James said earlier of like, you had all this momentum at the beginning, and Trump was coming in, all these institutions were going to pour in, and this thing was going to, Bitcoin was going to go to 500K sort of overnight, and it didn't really do that, right? Like, I think people get caught up a lot on Twitter of, oh, it's so over, we're so back, the super cycle, the 4-year cycle. I think a lot of that stuff is it's still important and still relevant, but just much less so. Like as the entire crypto industry and ecosystem gets bigger, you'll start to have less violent shocks, both up and down. Like the days of Bitcoin going up 10x and the days of Bitcoin going down 80% are probably over. We're and I think Nick and Brian mentioned this earlier. Like we've transitioned away from this retail gamified trading token. Where people are doing 100x leverage to a proper institutional system with spot ETFs and real, institutional volume. So it'll just, I think it'll continue to go up in a much more mild and measured way. Interestingly enough, if you look at the last 5 years, Bitcoin has gone up at an average of like 20 to 30%, right? Which actually seems right and seems very, very reasonable. It just doesn't go up linearly in a 20 to 30% way, right? Like you'll still have these ups and downs. I think the way that we view it and the way that I sort of think about it is it still is a beta to the general stock market or the equity and bond market. It probably trades a bit more like a pharma stock or like a high growth stock, but macro uncertainty and macro factors are like very important and probably influence influence the price and crypto market cap a lot more than it used to. Like before, it used to trade sort of asyncratically where people would put leverage on, put these positions on, you'd have these cascading liquidations. Whereas, now it's we're a bit more in like a big boy arena where that doesn't really happen anymore.
Great point, Kev. I keep coming back to institutions because it's what I know, right? But I will say the institutions bring one thing for sure, and that is patient and long-term like capital deployment, right? So part of what you saw with previous cycles with kind of retail panic selling, extreme volatility, I think that's going to continue to be muted. I don't know if it's controversial. I don't think it is, but I'll say it. I think the 4-year kind of Bitcoin cycle is over. I think, and there's danger in trying to look back and say, with predictive certainty on a go-forward basis, that the chart patterns you had with the halving events persist. I think you're going to see probably less upside volatility than you've had historically, but also less downside. And I think all of that it's good for retail, it's good for institutional adoption, and I would say it's good for crypto as a whole. So
100%.
Yeah, I think it's a maturation. It's not to take away from some of the early designs and aspirations, but it's good for the space.
The best way to look at it is, how many Bitcoins that are mined in a certain day or in a certain month, what that is over, just the ETF flows, right? Like, or just the amount that are in circulation or trading. Like before that ratio or percentage was a pretty high number, right? Now there are more ETF flows in a day in and out than there are Bitcoins being mined or sold by miners in a month, right? So like that dependency and what drives that like 4-year cycle and halvening and all that is just like not as relevant anymore on a percentage basis.
Yeah, I think one thing is like we also haven't mentioned the mass liquidation that happened in October, right? Like as an industry, I feel like we've almost completely forgotten and moved on from it, which is the biggest liquidation event in crypto history that, to be honest, most of us kind of forgot about within the following 2-3 weeks. And obviously we haven't mentioned it here, but I think that just speaks to the level of maturity that there is in the space and the levels of risk management. Yeah, these liquidation kind of washouts happen. Certainly when there's over leverage in any space, and we see that a lot, obviously, right now with all the perp dexes that I alluded to earlier. But overall, I think the fact that as a space and as an industry, we're able to recover from the mass liquidation event that occurred back in October so quickly just speaks to the kind of overall muted effect of the peaks and troughs that we might see throughout 2026 next year. Again, forgot what year we're in. But yeah.
You okay, James? You okay there?
We'll be hosting an astrological symposium for James after this too.
I don't know what year it is, and I don't know how old I am. I every day I get asked, and I'm like, I think I add 3 years every single time.
Symposium's a good word. Looking it up in my thesaurus.
Kevin is just so locked in to Nick's vocabulary on this space.
That's why we call him Kevin Locked In Blackburn.
Right. But you guys have said some really interesting things. However, you're breaking my heart a bit. Bitcoin's not going to 100x anymore, Kevin. That's tragic for the degens out there, you know?
I mean, maybe if it goes down to 1,000, it might 100x then.
But kind of moving on here, you know, you and I were talking earlier, like about some things we could like chat about, obviously on the space. And you had mentioned all like the crypto IPOs here at the end of the year. Like, should we attribute some of like the price movements this year to like all of that happening over the past couple of months? What do you guys think?
Yeah, I mean, it's probably, I mean, due to a lot of the stuff that we've talked about of just like regulatory clarity and institutional adoption and where this sort of crypto ecosystem is moving, where, you know, before it was important. It wasn't necessary to be a public company to you know, really entrench yourself in the space. And as you see sort of the ecosystem mature and get more sophisticated, the necessary step is just to, you know, go public and be you know, in that space. So I think with Circle and Bullish and Gemini and all these companies becoming public, I think it shows the sophistication, the maturity of this space. I think for a long time, it was really only Coinbase and a bunch of mining companies that were public. And it's always funny going to these conferences and speaking to friends that, you know, work in asset management, and they have, you know, their basket of crypto companies, and you look and it's Coinbase and like a bunch of miners, right? And it's like not really reflective of the actual ecosystem. So now, you know, as our industry is kind of standing up and maturing and getting more sophisticated, you're seeing that pathway of a lot of companies, you know, doing exactly that of going public, which I think is cool. It's just sort of another notch of you know, where this space is going and how this sector is actually standing up and becoming a proper sector.
That was a really good segue for me. Thank you for laying that out so nicely. As we're kind of coming to the end here and just thinking about 2026, can everyone kind of chime in and, you know, give some parting thoughts to our community about maybe what they're hoping for or what they're expecting, what they're seeing, and we can kind of close things up nice and tidy today.
I think you're going to see a very strong year in 2026. The foundations have been laid, the regulatory environments are getting more clarity. And there's a lot of these emergent market opportunities where the infrastructure was never built out to support legacy, you know, financial literacy or even financial inclusion. And our industry can rapidly go into those markets and onboard, hundreds of millions of people. And so I'm really encouraged by those things. I think the intersection between digital assets and artificial intelligence will just deepen, and it'll be extremely interesting as more of these AI agents can perform activities that are useful to us, and they're going to have to do economic activity too and make payments. It makes sense for them to do those things with digital assets. So there'll be some themes that continue on, and I think it's going to be a strong year for the space. Basically, if you have a perspective that things that are better, cheaper, faster, with large audiences and huge total addressable markets are good places to be focused on, then this is one of the biggest ones in the world.
Yeah, I think just to add, I think there's a couple of themes that I'm looking forward to seeing how they develop in 2026. I think there's been a lot of talk about real world asset tokenization. Haven't seen a lot with that, but I think we're starting to get some of the underpinnings in place for that. And the other big kind of broad theme that I'm looking forward to seeing develop in 2026 is just simply the amount of money that I think comes into an investment that comes into the space. I've got friends that are financial advisors and up until very recently have been handcuffed from recommending any kind of digital asset exposure to their clients, right? Their clients may have some, but they don't necessarily have it on behest of the financial advisor recommendation. I think when you start to tip some of those dominoes over, the amount of investment that's going to come into the space and the kind of maturation that's going to continue is going to be a bit. I think we're going to look back at the end of next year and be surprised at the level of adoption from more TradFi institutions that start to behave more like hybrid institutions. You're going to see a lot more positioning there to try to distance themselves from the old TradFi space. There's a bit of an inevitability to this whole exercise, right? Nick, you mentioned cheaper, faster, better. Like, regardless of what an institution's individual take is on crypto and crypto adoption, they go where the money goes, and they go where the opportunities go, or the perceived opportunities go. And I think there is no turning that spigot down. I think it's going to only go up and to the right. We are going to see Bitcoin 100x, just to be controversial. Probably not next year, but you just need a long enough term time horizon. But we're going to get there.
That's what I like to hear, Brian. Thank you.
Brian's the king of drawing lines on a chart up and to the right. It's a specialty.
You just keep going far enough up and to the right, and you'll 100x. It's fine.
Yeah, it's always fun to make predictions about next year. I think we touched on a lot of it. I think like the maturation and just the infrastructure of it continues to grow. I don't know if it's 1 year out, 2 years out, or 5 years out, but I do think probably like half of the people using crypto won't actually even know that they're using crypto. Again, I don't know when that is, but it'll just be how money moves on the internet. And I think that's a pretty exciting time, that there is this like additional revolution of utility and interface and usability and accessibility of this whole thing that I think is really at an inflection point. And it's something that we sort of strive to do all day, of making crypto easier, better, more accessible to people is our kind of our underlying mission. So again, I don't know if that's a 1 year out or 5 years out or 10 years out, but that's my take.
That was all very democratic, guys. Very diplomatic, excuse me. James, I'm expecting something a bit more chaotic from you, please.
Something a bit more chaotic.
Yeah.
You said Nick was the polished one, so I guess that means that we're supposed to be not polished. I think, first of all, maybe to be a little polished, I think we're going to have a little bit more nation state adoption in 2026. So looking forward to that. I think maybe just like a few different hot takes I have. I think we
turn
might
up the heat.
Turn up the heat.
Turn up the heat.
It's hot in this room already. I'm sweating.
I want the spiciest version.
I think we might have like the first one or two ETF failures in a way. Like, admittedly, I don't think every single cryptocurrency needs an ETF. And I think just overall, there just won't be demand for some of the ones that get launched. So I think like Yeah, I think the ETFs are absolutely amazing. Enabling people to invest in digital assets via their traditional brokerage accounts via ETFs is amazing. But like, I don't want it to stem and go too far down the alt curve with like launching ETFs for every single token that exists, because I just don't think it's needed. Um, Also, like on the RWA tokenization front, I'm insanely bullish on RWAs and tokenization, but I'm insanely bullish when like it makes sense. Like, oh yeah, it makes sense that this should be tokenized. So I think in 2026 we might have like some platforms come up that are tokenizing like things that quite frankly just don't need to be tokenized. And I don't know what the contagion event is going to be there, but I feel like there just might be some, small kind of controlled chaos with, tokenizing and securitizing things on chain that, to be honest, just don't really need to be. Like people always make the argument for tokenizing things that are fairly illiquid in traditional markets. It's like, oh, if we tokenize it, it'll be more liquid. But I think actually the opposite is the case. If it's illiquid in traditional markets, it's going to be more illiquid in tokenized markets. So I think there might be some crazy events there that happen with tokenization and RWAs in 2026 if people aren't careful and I guess managing risk appropriately. Yeah, Brian.
James, I just heard you give 2 examples of spice, but kind of spicy to the maybe downside. What's a spicy upside opportunity that no one's paying attention to?
Spicy upside opportunity. Like it's hard not to be bullish on prediction markets, but I think there's a huge caveat there just because of the regulatory uncertainty. Like you have a lot of the gambling kind of houses in the U.S. probably, probably pushing for regulation for the to control the prediction markets, and then
prediction markets are just gambling rebranded.
Whoa!
They've done a hell of a job.
They would never call it that. Come on,
they've done a hell of a job.
Yeah. But I think prediction markets are going to be super bullish in 2026 as well. So maybe a little bit of spice in 2 directions, but overall, I think it's going to be a really fun year.
Congrats on knowing what year next year is, James. It really took you an entire hour to get there, but you did it.
I apologize.
Yeah. And not that anyone asked the intern, but the intern is bullish on culture and IP tokens because yesterday Nick was speaking with Pudgy Penguins and the stuff that they're doing is super cool. Really interesting to see. Obviously, nobody sausage. Big fan over here. It'll be cool to see how that kind of stuff plays out on the global landscape, along with all of your guys' institutional hoo-ha over there. But that kind of brings us to the end, guys. So I just want to thank our favorite finance bros for taking the time. And that is it for our 2025 Wrapped. So may your 2026 be full of unexpected airdrops and green candles and heavy bags. And we appreciate you guys and hope that you have happy holidays.